Oh, I'm not superstitious, but I'm little suspicious. Eli Manning of the New York Giants stated that during his first Super Bowl run. And I totally feel the sentiment right now. Welcome. It is the 8th day of March 2018. My name is Derek. Like always, everything within your own risk and your own reward. Looking at code TUSD. True US dollar. Basically the invert to that of Bitcoin. It's worth $1. It should always be worth $1. However, the 24-hour high and low, interestingly, is at like $1.0694. Okay. And when you see a situation like that, what does that mean? Well, when it's at a much higher price, when it's worth more than $1, that means this price would be higher on this chart. Let's assume that when the price moved up towards, well, this higher end here, that it was $1.05. That means it was about 5% higher than where it should have been, giving you a very good short-term sell opportunity. And if the price happens to be at around 95 cents, 96 cents, basically 90, well, depending on the percentage move, 96 cents is around 4%, subtract the rake. And then that would be a situation where you could be a buyer buying it for just a couple percentage cheaper on the moment than it usually is. And that would pretty much occur during a downtrend or an uptrend in Bitcoin. This is the Tether index, the one that has been around for quite some time, where the other one, TUSD, has only been around for a couple of days now. And as I was talking about this before, I see this on the sideways consolidation pattern. We got this key high, we got this key low in here. It's got to break one side or the other. Right now it's firmly in the range. It is looking like it might want to resist this area because up to this red candle down, it spent a few periods below it, but as did the case in here as well yesterday. But when it went, it didn't do that great. It had its minimum move you would expect a previous high. But like I stated, I'm a little superstitious, because I do not believe in superstitions. However, whenever I get on a run where I want to bet against the US dollar, I don't fare too well. On the trade, that is. Portfolio-wise, I fare very well because I barely bet much against it. And then the Bitcoin price just goes up. And then when I finally say, nah, that's like screw it, basically, then the correction will happen afterwards, well, always. But anyway. So I figure, yeah, let's just put a small position in. And I have already calculated where I consider the next leg to go if it breaks below. And that number comes in at around 84.50. So to get my price, I just did the 1 divided by such. And when we go to the TUSD, 10,000 or so is the current price, which is my entry price. I'll be looking to get out at 11,000, but on Satoshi. But it also means as it makes, when legs higher come into play, like, oh, Bitcoin goes up to 14,000, 20,000, or whatever significant legs up, do I stay relatively superstitious, small-stitious, whatever you want to call it, and then just continuously put small orders in to buy this? And I'm thinking I do. Because I would actually kind of enjoy, oh, okay, so I put in a couple hundred to start, put in 60 bucks here, 50 bucks there, and seeing, oh, that 50 bucks is worth 30. Oh, that 30 bucks is worth 10. I kind of want to see that because the rest of my Bitcoin portfolio, which is a grand larger sum, would be doing well. So I don't know how I'm going to do this, but I do find it interesting how there is a new one on it. I will look more into the matter, so it's best for me to let you know that I'm presenting the chart analysis before I'm trying to search anything on the internet to what makes this something worth having, because what's the whole point of having this when you already have the USDT? It does the exact same thing. In fact, that one is easier because you already know the price of Bitcoin, and I'm going to have to do a lot of this annoying 1 divided by the root to get what this price happens to be. Because if I go, well, 10,047 and do 1x on that, that's 99.53. If I do the Bittrex or the Bitfinex exchange, let me go search for it. It's 97.52. So technically speaking, at this time, the price action on it would say that it's a good time to buy it by 1%. Let me just see what the verified price is on the exchange. And sure enough, it said 98 cents. So that means you get a 2% deal for buying that at this exact second. So I literally bought $25 worth, which is pretty much nothing for me. But just because I can. I want to talk about ZCL now. I like this code right now as much as Webbot likes the Ripple code, which doesn't say much. Although I should love it because it's got the volatility and then some that I admire. And I knew I should have bought in the 60s. I really, really knew that. This is the 30-minute time frame. But we are seeing here that it had this sudden shock down move. When I talk about buying at these key levels, I usually don't want to have these moves happen this fast. It just is, that's crash mode mentality, which means things are changing within these markets. And because I knew it was a whole large dump load down at this point, and I was thinking every time I was at this fib line, man, do I buy? Do I buy? And I should have. And I really should have, because speculation, risk reward, probability, odds, I knew it, that it was a good play. I knew that. And as we can see, the move came in. Since the decline, 18 average, and I'm showing a lot of periods for a reason. You can see starting February 28th, 1900 hours, it resisting the 18, resisting 18 at 5 a.m., then again at noon the next, then again 6:30 p.m., then again the next at midnight, and then it changed in here. It started to, it stopped the downtrend. Things went neutral. I could never move all of this, but it stopped the downtrend, but there's a grinding lower roughly around March 3rd at around 8 p.m. Eastern Time. Continuing to grind lower, half-assed rally up on March 4th at noon. Continuously down. And when I was seeing it at this point and throughout every moment, really from March, well, this point here on March 4th to in here. Now, smart play, if you were just obsessed with having alerts on and just looking at the charts over and over and over again, was you can see how just breaking above this resistance point, you had the band flat and you establish resistance, you come back to the band, and that worked out to be a magnificent entry point. Of course, I would rather do the speculation, and like I was mentioning before, extra normal market conditions, and now you went through one fib level, huge move. You barely support the next fib level, huge move. So you go through 2 levels fast. That's crash mentality. And when you do it that fast as well, and you look at now at the next 2, 5, 6, 8 days from now, Is this going to be the start of something devastating to the downside, or is this just one quick move lower and then she's all back and running again? And I don't know the answer to that. But I do realize, based on this move, and what's looking like a possible head and shoulders forming, however, like I stated in here, when you look at the market trend, and you're doing the opposite of like I used to buy, which is just looking for the smart entry and exit points on a non-bearish level to buy, and so on. This was a good time to buy because of how the 18 average was transitioning itself. Well, now how is the 18 average transition? After this great move, breaking established resistance at around 78, going to a double, correcting very successfully for another leg higher within the 18, having its top in at 190. Magnificent, extreme volatility, and I've been stating this with this code when I talk about it anyway for quite some time, which is why I should have been always aggressively in this one form or another. And yeah, I do kick myself a bit for not buying here, which is fine. But now as the 18 average is concerned, you have the clear break towards the low here, 1600 hours on yesterday, 4 p.m. Then on the 5 o'clock hour, actually this is a 30-minute time frame, 4:30 p.m. rather, it was staying at that level. That's always a warning sign. That's always a warning sign. And we can see in this case, it did exactly what the warning sign would be telling you. It fell from that 18 average with an okay red size, another better red size move, about 3 periods of going sideways and one small final leg lower. Since then, it's had a support success, and it has mainly corrected this market over the last half day plus, going sideways. It's gotten above this 18 average, but notice here at 7:30 this morning, it kind of gave you that warning sign again. What's it been doing for about 5-6 periods since? It's just been stabilizing below the 18 average of lows. That's very much a warning sign. For the same theory, you're looking at the inverted head and shoulders pattern. We're seeing this here. So therefore, price objectives. Oh, this is fun. Well, it makes it an interesting play on a retest of where it came from. The upper end of this area, I would put it at around 94,000 down to 60. I tried to get in at 60. It bottomed a little above it. 63 it bottomed. So that's the key areas. You also got Fibonacci in this area here. Can it make a significant higher low from point A to point B? Because if I adjust the time frame, the 18 average is going to show me a totally different story. Let's just gander at what the 2-hour would look like. The 2-hour is showing that the uptrend has now moved into the correctionary phase. We see how this rally attempt came up to close to the 18 highs. And these 3 red candles showing very weak signs, just like we're seeing on the 30-minute chart, 4-hour time frame. There we have the test of this 18 average in here. It has further room to the 18 average of lows at 114. But again, as we see this move, you have a big down move. Are you going to trust this rally? It's very tough to do so. And when I talk about the strategy of just waiting for it to have a huge move lower to scalp a good gain, which I missed in this one. I missed that one. And I knew not to buy in here, and I was right on that one. I mean, that was just too sudden of a move. When you're talking about normal A, B, C type of movements, Elliott wave kind of deal, to get to those key points, then I get interested. But when it happens instantly like that, and especially when the fundamentals of the airdrop, I guess double airdrop, I guess, then it makes the game plan change to normal situational play. And if you are playing this game without even understanding fundamentals, then your buy order would hit here. You should be knowing something is going on if it went down this way. And if you bought here, you'd be like, oh. Well, if you bought here, you'd be like, Well, you'd probably have 2 buy orders in. Maybe you buy here, you see, oh crap, 2 buy orders got hit. Geez, that kind of sucks. But you realize where you came from, that you had a huge profit. You're just finally buying back because of, well, I'll just quickly show you the 3-day chart. Yeah. Okay, back down to, where were we here? We will be, yeah, you just talk about buy orders. So you buy here, but down it goes. And you'd see probably the orders fill immensely at the same time. So something was going on. You could immediately get out of your first buy order afterwards if you noticed it within the first few hours thereafter it. You'd only be able to get out of it for a small 7% profit, with this one being, of course, underwater by a small percentage of about half its value. But buying here on the 3rd of March, say if you had the number in at that point, you had to endure a small loss for the next day, and you had to wait a couple days. Now, if you have your sell order here, you kind of missed. But in reality, if you talk about situation of buy order city, you could literally have about like 10, 12, 15 buy orders come in. And if you had that, you probably only had about 2, 3, 4 sell orders happen on this move higher. And then, yeah, that would be what well, basically, I'm just now rambling on. I got to get to the point of where I want to go because this is becoming a very long video now. And I did want to talk about these 2 key codes because I don't know what else I'm planning on talking about. But because I don't know if I want to trust this rally, it makes buying back at this level less enthusiastic, although it still could very easily be profitable. I also look for smaller pumps on such in a bear case scenario where if it comes back down to the 60 change level, this time it went up to 180, I'd be looking maybe a move to come to 100 to 120-ish area. Still, when you're buying at around 60 and the market can double on you, there can be very good ROI for you. But buying on a key leg lower, if this thing breaks below here, I could calculate some Fibonacci and it would probably give me a similar number to the Fibonacci of this low and this high, Fibonacci downside. I'm looking for a downtrend, easy, a lower high rally, noticeable. And I get a price objective in at about the 30 handle. Let me get the exact number. 31,847. And it wouldn't surprise me if it coincides, and it kind of does just by looking at it. 31 area, 30,000 is where I'll be looking to buy if this fails. As much as it failed for me to buy at the 75 handle when it was even down to 60. That was a botch on my end, I guess. That's fine. Because whenever you make mistakes in this game, don't sweat it or just take a paper towel and remove the sweat away. And okay, yep. You knew the play was there. It was just what was the failure? Failure to execute. Yes, you don't have that much experience on markets crashing and the Bart Simpson formation. Okay, so be it. But I just got to make sure that I execute this 31 level when it gets there, if it gets there. Okay, that'll be at the end of this video. And thank you for tuning in. Have yourself a great day. Bye-bye.